Yeah.
I mean, it's the sort of weird thing is the Civil War had a lot to do with the Irish immigrants coming in. You get off the boat, you become a Union soldier, and off you go to war. So.
Absolutely, absolutely. Plenty of history in America, a young country, but very rich in history. So, okay, well, listen, let's get started officially this morning for our weekly broadcast. I'm David Johnstone. I'm your host, or co-host, should I say, of this broadcast. My co-host is Mr. John Corey. He runs Property Fortress. It's a monthly networking meet. So, good morning, John. How are you?
Good morning. I'm doing well. How is everybody else?
Yep, no, absolutely all brilliant this end. And for those of you that don't know me, and I know there's a number of new guests on today, I'm the CEO of a equity property crowdfunding platform called LEOcrowd. And John and I put this broadcast on every Thursday. It's 30 minutes, designed to be short, sharp, and sweet, informative, focuses on different parts of property, the property market, and also focus a little bit on some of the projects that we have on our platform. So above all, it's designed to be educational. And today you can see we've got two brilliant guests, which you'll hear from in a few moments. And the topic today is joint ventures and HMO conversions. So if you have any questions on that, or indeed anything, put your questions or comments into the Q&A for us, please. We don't use the chat box. It's easier to manage the Q&A. Asher Weiner, our online head of social media and marketing, he'll keep an eye on the questions and jump in when there's relevant questions to the conversation. So we always enjoy feedback, so please partake and get involved in the Q&A. As I say, this is about learning, it's about education, it's about providing you with some information. I'm very, very confident today you're going to enjoy what you hear from our special guests. Before we get into that, John and I always have a brief exchange on the current market overview. And I suppose, John, yet again, we're on this sort of yo-yo. The press go from impending doom to the market couldn't be stronger. So currently we're on the upward pendulum swing. Property market busiest in 10 years. Buyer numbers hit record highs. Prices rising. So I know we've had this conversation, about the same conversation for 14 months now. But any observations on what's happening in the UK market currently?
So not really. I mean, the press definitely can provide some headlines, and that's fine. I do want to reinforce people should look at these headlines as this is what everybody else is reading. It doesn't mean it's fact, but it might mean that the person you're trying to buy from or sell to or trying to do business with believes it. So it's a way of understanding the backdrop that might be going on in someone else's head. You're going to negotiate your own deals based on what you believe is true. Don't assume the headline writers are any better than you. In fact, they probably have less experience than you when it comes to actual property investment.
Mm-hmm. Yeah, no, that's a very, very good point. And this pendulum just seems to swing back and forward. And as you say, it's just mainly headlines. People selling papers always going to the extreme. It's maybe never quite as bad as it's made out to be, and certainly never as good as sometimes it's made out to be. And it is important that people are aware of the context. Now, John, I'm really fascinated to see your view on this one. You're a man that has very rarely views just in the middle. You've got strong views based on your experience and your track record. Couldn't believe when I read this, and Tina mentioned earlier, she heard it on the news as well. House builders should drop appalling gagging orders. So developers, particularly, are getting clients to sign NDAs that if there's anything wrong with the property, they can't talk about it. And now the Parliamentary Housing Committee has stepped in to try and readdress this. So, A, had you heard of this? And B, what's your thoughts?
So I did see the headline when it came out, and I saw ones months ago. I think it's actually a bit of an own goal. I understand if there's a particular problem that maybe you want to try to lower the profile of it, but I don't see that this really serves much of a purpose. I'd like to think that a developer and an owner can work it out, and that the developer will find a way to focus on the customer and like let's make the customer happy, and at the same time, be clear what we're offering and why certain things should be a certain way. But this idea that you're going to muzzle the conversation and somehow it won't get out, it's it rarely ever works. And what is the developer going to say? Oh, we didn't. They're going to deny that the issues happened after the word leaks, and are they going to pursue the homeowner? So they almost can't win other than scaring people. So I just see it as a bit of a childish way to go.
Yeah, very much so. My first thought was it's almost like conceding that you're going to build a bad house by asking people to sort of not talk about what's going to go wrong. It's like, really? It seems to make no sense at all. But yeah, I just thought it was interesting that's kind of where the market's got to. So that's an update. If anyone's any comments on that, or any of the attendees this morning, I've either heard of this happening in practice. I'd be really keen to hear of our clients willing to actually sign this. And even people can fire into the chat now. Would you be willing to sign something like this if you're having a house built or having work done by a developer? I would definitely be curious to see what people thought of that. So that's our market overview for today. Moving on then to our guest today. So regular attendees will know we like to focus on real lives, what we call real people, hearing from people in the property, the cold face, as I call it, not theory, but practical. There's so many courses people can go on. They can pay a whole bunch of money, in the good old days, sit in a hotel room and be told all about property investing. I like to hear from people who are actually doing it, actually in the market. So delighted this morning to introduce our two guests. We've got Tina Wenham and Rachelle Hillier. I'm going to let them introduce themselves initially, and then we're going to move into a conversation about HMOs and sort of joint ventures on that. So Tina's no stranger to us. She's been on a few times before, but Tina, I'll not steal any thunder. I'll let you introduce yourself, your background, and what you do now.
Thanks, David, and thanks for having me today. I'm Tina Wenham. I am director, along with my business partner Andy, who some of you may know, at Target 5 Property Consultancy and Developing. I've got 20 years plus property experience in the industry in our immediate local area. I've also, I'm a member of the Association of Residential Letting Agents, and I'm qualified in that. Got a diploma in residential agency, served as the president of Brighton Hove Estate Agents, and along with my business partner at Target 5 have completed now approaching 400 developments, with him doing some of them. And I've worked with big PLC developers in land and consultancy as well. Yeah, that's me.
Brilliant. Go ahead, Rachel. Glad to have you on this morning, making your debut on our weekly broadcast. So delighted you could join us, and want to give a bit about your background and what you're doing.
Thank you so much for having me. I'm Rachel. I'm the director of CSEE Investments Limited. So I am a property investor. I also have a financial background. I've worked in accountancy for sort of the last 10 years or so. So that's been both in practice and then also doing service charge accounting in the property sector. Also alongside this, I also do a lot of social media work, working with various brands, sort of sharing what I do and sort of trying to educate people as well to be more smart with their money. And yeah, now more onto property, and that's sort of what I'm sharing with people, and hopefully being able to get them involved in investing as well.
Yeah, brilliant. And I know you're very modest about your social media presence, but you are a bit of a social media celebrity stroke influencer. I know you've got a couple of accounts. Your main personal account, how many followers do you have on your main influencer personal account on Instagram?
Yeah, so my main one that I use, my personal one's got about 57,000, I believe. And I've just started building up my property one as well, and I've recently launched my website as well, which is cseinvestments.com, and also my YouTube as well. So I'm going to be sort of combining everything here and sharing my property journey, with everybody who follows me.
Absolutely fantastic. Look forward to that. So it's it's an interesting concept that you can send a message out on a social media platform and 57,000 people are likely to read it. It's That's quite cool and gives you a good base. So fantastic. So let's get into the topic today. So what we're about today is slides going. HMOs and JVs. So I suppose initially, just ask both of you, what was it about HMOs that caught you to, that sort of got you in that as your strategy as opposed to doing something else? So I'll let you take it each on that as to what attracted you to HMOs.
For those, some people who have joined us today may well know us before, but that has been mine and Andy's core strategy at Target 5 for some years now, originating in Brighton and the student sector, and that was sort of a natural progression, and was a very popular the target market of students wanted house shares, so HMOs was very much a natural progression in that area. And more recently, we've moved slightly away from the student area and more into professional sharers and some of the more fringe locations in different cities along the coast as well. But it's high yield, it's good returning, it's a good way of recycling your money out of a project by adding value to it. And it is providing accommodation for lower level income people, which is a massive part of what is needed in those sort of high density areas as well. So it makes sense.
Yeah, indeed. And Rachel?
Yeah, I think it was sort of similar for me. Obviously, firstly, the cash flow of them and the figures. But again, giving people really nice places to live, and then also coming in from a different angle. For me, sort of working on the HMO, we furnish it, and that's something that I can work with brands on, and that's something I'm really excited to kind of incorporate my my more creative side and design side, and being able to use my social media and the work that I do there, and also to be able to bring that into a HMO, because we do furnish it, and that sort of thing too.
Brilliant. Okay. In terms of COVID, and obviously this is something that is still with us, has had a significant impact on the market. Some would say negative, some would say positive, in terms of depending on what market sector you're in. So I suppose just from a real lives point of view, in terms of your day-to-day business for both of you, how has COVID impacted, say, this last 6 to 9 months on how you do business? And have you changed your strategy, or how have you adopted your working practice due to COVID?
There are different elements of what we do at Target 5, and we also have a sister company, Sussex Property Partnership, which is a letting agents. And we initially thought that it was going to have a huge impact on tenant demand, on tenants not wanting to live in those sort of combined co-living type spaces because of the obvious issues around being able to social distance. But in fact, we were quite surprised to see that there was very little drop off, very little impact on people wanting to leave those HMOs. And in fact, what they did was they formed their social bubbles within their HMOs. We saw a little bit of impact on the rental income because of people being furloughed and maybe not having as much money, disposable income, people losing. Certainly in the immediate Brighton area, we have quite a high density of self-employed people, and a lot of those are in some of our professional sharing HMOs, and that sector was massively impacted. In terms of finding properties in the development side, if anything, we've got busier, and I think that's sort of can be alluded to slightly on some of your previous slides about where the property market is right now. I think there's quite a lot of people trying to take advantage of the perceived increase in the market and sell now. So that I think, in terms of sourcing and finding things, that's been quite busy for us. I think it's going to be interesting to see what the real fallout of this. I think at the moment we're in a little bit of a protected bubble, with the government giving quite a lot of money to people to sort of soften the blow temporarily. But I think the real interesting impact of COVID will be in 6 to 8 months' time, when we start to see that possibly being pulled away.
Yeah. Rachel, in terms of sort of the investment side, I know you have a lot of people that come to you ask about getting into property as newbies and investing and things like that. You know, how have you found that COVID has changed people's appetite for investing in property?
Yeah, I mean, I think if anything, it's actually made it a bit better in many ways. Because again, I just think a lot of people sort of depended on their jobs and that sort of thing. And then COVID has kind of taught us that your job can go at any second potentially. So it's a good idea to look at different income streams, different ways to use your money. How can you make the most out of your money and all that sort of thing. And I think for me as well, as sort of a social media person, a lot of people have been online now. And yeah, that's just really good, because I just feel like social media has sort of blown up even more over this period because so many people have been at home. And yeah, I just think I've had a lot of interest from it, because people are just thinking, you know, what can I do with my money to make it work a bit better for them, and just looking at different options really, rather than thinking I'll just leave it in the bank, just keep working. So I think in many ways it has actually had a positive impact.
Okay, no, very good. So let me bring John in just about JVs, and just to clarify really what JVs are. This is a term that's used, you know, in property courses up and down the land. I was on Clubhouse this morning and people talking JVs. So John, maybe just explain what a JV is, and maybe just some of the things that maybe need to be aware of from the point of view of compliance possibly. And then I want to hear from Tina and Rachel the pros and cons. We'll start with Rachel first and then go to Tina in terms of the pros and cons of JVs.
So most of the time in the property space, we talk about joint ventures as you found a great deal and you don't have the money, and you can borrow the money privately or you can joint venture. And that's sort of how the phrase is used, that it's the alternative to borrow the money privately. And there's no hard and fast rule in this. There's quite a bit of fluidity. It's whatever works for the two people. Any married couple is a joint venture. Any team sports players, you could say, is a joint venture. That together you're more powerful. Together you can accomplish something you can't accomplish independently. Now, from a FCA point of view, so when we're talking about financial promotions, if you're marketing for a fixed return loan, that is a restricted activity as of 2017. So an update since PS 13.3, they've now restricted the ability to promote for loans at some level. And joint ventures normally mean we're going to have shared risk, shared reward. How you structure it, whether it's shares, doesn't matter. The point is you're in this together. Maybe it's more than two people. And as soon as you get into more than two people, then possibly you have a collective investment. So the broad brush, and Tina and Rachel can explain what they're doing, is you bring together two different or more than two groups, and somehow you're stronger together. You get the deal done. Classically, for property, you also have an exit defined on the front end. So,
okay, brilliant. So, so Rachel, the pros and cons of a JV. So, what do you like about JVs, and then, you know, something that works and something that maybe you're aware of?
Yeah. So I think this one, obviously, I'm particularly excited about it. It's my first JV like this, and I'm really grateful to have the opportunity to work with Target 5. And like for me, it's just sort of a huge learning process in terms of the build and all that sort of stuff, which is really exciting. And I think this particular one just fell into place for both of us at the right time. Yeah, I was already a Target 5 investor, and then this one came along, and it just seemed like a really good one for us to both do. And I think for me as well, obviously being able to connect with developers like them, and then also being able to share that with my network is really good, because I've got a lot of people who are interested and want to get involved in this sort of thing. And now I have people to work with on it, so it just feels like a really good collaboration, I suppose. And I think in terms of the cons, I think you just need to make sure that you have sort of the right exit strategy, and that I suppose that you're on the same page. You know, we've had this conversation, haven't we? And we just need to make sure we're both happy. It doesn't want to be, you know, one person wants to keep it, one person wants to sell it. We just wanted a really clear view of exactly what we wanted to do with it, all the different options, and just to come to an agreement before we really started working together, I think.
Okay, no, I think that's really good. You've two very clear points there. Education, obviously we love that. We love education when it comes to the world of property, and being involved in a JV means you can learn particularly when someone as experienced as Target 5 and Tina and Andy. And then, yeah, the details, I think that's again really good point about what is the exit and having agreement about that. Yeah, I started off my property journey and we built a portfolio of 23 properties in 18 months back in 2000 in Northern Ireland. It was a 5-year agreement that we were going to borrow some money off a guy, keep the properties for 5 years and sell them. For those of you old enough, you'll immediately know what happened to the property market from 2000 to 2005. However, one of the guys panicked in 2002, demanded his money out, and we had to sell all the properties and liquidate in 2002. And we actually missed the properties growing by about 70% in value because we didn't have agreement on the exit. Tina, pros and cons of JVs. I know you've probably done a number of these with Target 5. So yeah, let's hear your thoughts.
Yeah, I mean, I think the first thing to point out is when you're looking to do a JV, you've got to be quite critical of yourself first and foremost. So you need to look at what your weaknesses are to work out who you're going to collaborate with and make sure that the puzzle fits, if that makes sense. So there's no point in having two people who are amazing at social media but don't know how to do investing, or so you kind of have to have a balance of experience and strengths and weaknesses, and being able to be really honest with each other about that from the very beginning. And that was one of the first things that Rachel, Andy and I sat down and spoke about. It's like, right, well, what area are you going to be really good at and what area are we not going to be good at, and vice versa. And it's very sweet of Rachel to say that she's really excited to learn from us, but there is so much we're learning from her as well. And I think it's important that, you know, all of that kind of promotion stuff as well is really important. And there were people that we looked at to do this project with who wanted to JV with both us and Rachel, actually. And in the end, we were like, no, we want to do it together. And I think it's important that you make that choice. And John alluded to it. It is like a marriage. And in some ways, it's much more stressful than that because it involves some quite high numbers and some big decisions to be made. And
you must have a great marriage, Tina. So some of the rest of us maybe may have a different opinion. John, I'm not going to ask John to comment on that.
Yeah. And careful, everyone. Yeah, no, and just making sure that it is all complementary, but also knowing the project, doing your research around it, having those difficult conversations around what the things that can go wrong, the risk points are right really early on before you make all of the agreements. And Rachel's exactly right, you know, making sure you know what your exit strategies are from the very beginning, and not just one exit strategy. Like, okay, well, we want to sell it. We both are, you know, on board. That's our first strategy. But what if that doesn't happen? What is strategy B, C, D? And laying those out in your joint venture agreement or your shareholders agreement. And the best advice I can give you is get those down, even if it's in an email to each other, even if it's not in a formal document right at the beginning. Everybody knows where they stand. And if there's ever any, you know, memory loss or, you know, change of circumstance or anything like that, then you have that framework, almost a heads of terms, I guess. Mm-hmm. But one of the biggest positives is being able to bounce ideas off of each other, and two heads are always better than one, in my opinion. And I think, you know, from both a risk spreading point of view as well as from, you know, ideas. And, you know, there are things that Rachel, you know, when we're on sites, like, oh, we could do this, we could do that. And there are things that, you know, the more nuts and bolts of developing is obviously what we've really got lots of experience in, but Rachel's got some really good design and, you know, promotion ideas as well. So
brilliant, fantastic. Okay, John, any last minute comments on JVs before we move on to talk about some case studies and properties?
Well, I think Tina hit it pretty well, that it really has a lot to do with what are you getting into the relationship for? And unlike a marriage, there's a clear exit that you generally have to plan for, and it's within a certain amount of time, you know, and maybe you need to be a bit nimble if the economy changes. So both people or three people or five people, whoever it is, being clear about why we're coming together, what are we going to do, how are we going to adjust, and what's our exit plan.
Yeah, very much so. Okay, I'm not going to do the last point on property predictions. I was tempted to put my crystal ball on the screen, which usually annoys John every week. So we'll not waste time sort of trying to predict the future, which of course none of us can. So let's get straight into a bit more about the project upcoming. I thought, Tina, I should put a wee slide in here of Andy, just in case he's feeling a bit left out. But for those that don't know, Andy is Tina's business partner, ex-British Army officer, obviously from a risk management background. That's because as part of the British Army, he was a bomb disposal officer, which is, I suppose, the ultimate when it comes to risk management. And but he's been a professional landlord, portfolio worth over 7 million, and obviously a very, very experienced guy. You can see there in terms of the amount of deals that have been done. So Tina, this West Buildings, yourself and Andy brought this to us last year. It was funded on our platform, and I know you've been very excited by it because it's heading towards refinance. So you want to give a quick sort of 35, 40 seconds on West Buildings?
Yeah, had a successful raise last year with you guys. Have been really pleased with how the project's gone generally. We've completed it in a shorter period of time than we first anticipated, which is great. Within budget, despite some challenges. Fantastic team worked on that, and it's come out really, really well. So mixed use, we've got commercial on the ground floor. We had to pivot a little bit and change our strategy on the upstairs due to a couple of legislation changes around what we could do. And we've got a 6-bedroom HMO, which is now currently 50% let. We are looking at our refinance options, although hot news, we do have an offer to buy it from an investor. So there is some decisions to be made around that as well.
Okay, no, fantastic. And I know there are a number of people
There's
obviously on.
Yeah, this is a really good point there, that I and other people who are a passive investor in this are along for a passive ride. And the nice thing about having good leadership at the front is, things change, regulatory, or things change, you get offers, and it's up to the people driving the project to make the best decision for all the passive investors. Well done, Tina, and Andy also.
Thank you.
Yeah, no, fantastic. I'm looking at the
Rachel
attendee
visited
list.
this actually, so she's been and had a look at this one. So
Okay, good. Setting the standard high for this next one, Tina. I like that.
Right.
Looking at the attendee list, I can see a number of people who have invested in this project with you, Tina. So they'll be delighted with the update that you'll be able to give. And I think your monthly update is being, in fact, it's actually went for approval yesterday. So any investors on today on this project, you'll get an email pretty soon with the normal monthly update and an excellent video of before and after, which I saw yesterday. So that's on its way to the investors, and you'll see that quite soon. Okay, last couple of minutes then in terms of wrapping up. If you want to know more about sort of Target 5 and the projects they've done on our platform as a case study, you can see it there. It's Preston, it's in Brighton, and you can go into there and you can actually download sort of the document that explains this project. It's a brilliant way to understand how Target 5 works. You also can register your interest, as we call it, and leave an email address and an amount that you may be interested in investing in this type of project. So it's a really good way just to see, if you like, the experience, the track record of Target 5. Now, I wanted to spend a minute on this before we finish up. So Rachel, you've mentioned that yourself and Tina are now doing a JV with yourselves and Target 5. And this is a project that's coming soon, and as yet is not a financially promotions approved investment pitch. So we're just literally highlighting that this is coming soon. It's on our platform, but not in full detail. So today is more about just explaining the location and what it is. But this is your first JV with Target 5, Rachel. So are you excited by it? And can you just maybe explain a little bit about the project?
Yes, I am very excited about it, and I think when I went to go and look around it with Tina, I think I sort of immediately said I really want to be involved in this one. It is it's right in the centre of Brighton, really nice location. I think when I've posted photos of this, so many people know where it is. It's a really lovely street, quite a nice historic building as well, got some nice features. And as I said, we're going to make it into a 7-bed HMO. Hopefully going to have some really nice sort of design ideas and things, like you did in West Buildings as well. So yeah, should be a good one. I'm really excited to see how this goes.
Okay, brilliant. And Tina, anything you want to add? Maybe how maybe you sourced it, and any key points about the project?
So just to mirror what Rachel says, really, we're really excited about this project, and it's been a little bit of a labour of love getting it secured. Took 6 months to finally secure it. We have exchanged on the project, so we're pushing ahead on this. So I think we complete in a couple of weeks. And yeah, centre of Brighton. We found it, actually, this was one which was through an agent, a commercial agent that approached us pre-market back in June. Was going to go to the market at 800,000, came to the market at 7, they were going to put it at 800,000. We agreed it at 735, and then a subsequent renegotiation down to 705. So quite a good below market value security on that. So that's good.
Yeah, absolutely fantastic. So there'll be more information on this, obviously, coming out in the days ahead. We have planned provisionally a project webinar with Tina and Rachel. I'm not sure if Andy's going to be on it as well, but we will be going into more detail on this project when it is launched View Deal. The plan is next Tuesday night at 7 p.m. Will be the project webinar for this, but you can tune into our social media, and of course if you're registered on our platform, you'll receive an update on that. But we're certainly looking forward to being involved in raising some funds for this project, and yeah, excited to be working again with Target 5 after they've delivered so well on their first project to date.
So I have a quick question on this.
Yeah.
Tina or Rachel, does this require planning, or is this already operating as a 7-bed?
No, it is actually an entire commercial building. Planning is in to convert to residential sweetenary 7-bedroom HMO.
Thank you.
Okay, so that is brilliant on that. So just to finish up, I want to draw people's attention to another project that's on the platform currently. This is at View Deal, which means you can, if you're registered on the platform, download the full offer document and read all about this project. Again, one that we're very excited about. I love projects that have character, that have sort of history behind them. This was a mill that actually would have supplied sort of energy and kind of ran the town in North Taunton in a bygone day. Susie Jenkins, who was on with us last week, and was a brilliant guest last week, they're raising 155,000 for the planning application. So this is effectively a planning uplift project. Estimated projected return of 50% being a planning. Of course, the risk on a planning uplift is greater than the normal development refurb deal, but then the rewards also more. So you can register your interest on this project. Those of you know, you can go to the pitch pages and actually leave your email address and the investment amount. We have had actually just short of 50,000 already registered in terms of interest. Doesn't mean that everyone will necessarily invest when it comes down to it, but certainly has been very, very strong interest on this. And we haven't even done a project webinar yet, or even really talked about it to the investor base. So delighted with how this has kicked off. So yeah, there's 2 projects you'll be able to have a look at over the next couple of weeks. So John, do you want to just mention our consultancy as we close? Any comments you want to make?
Yeah, I mean, if people have questions about property investing, anything related to the UK, any strategies or any other general topics of property investing, you can speak to David or myself. Just depends on what your question is, which one would be best. And if we don't know the answer, we probably do know someone who does. So if you wanted to get in touch and chat, those are the details. I'm using David as my booking agent, so contact him at those details.
Yeah, an expensive booking agent. But yeah, but so certainly between John and I, we do come from slightly different backgrounds in terms of property, both very experienced in property, and collectively we can provide a very, very good service for people who are needing specific things or have specific problems that they want solved. So more than happy to reach out to us, and we'll try and help if we can. So that is us for today. Massive thanks to Rachel and Tina. Asher, was there anything that I've missed, or any comments or questions that we've got maybe 30 seconds left? Anything needs to be added?
No questions or anything. We had a small mention from Susie earlier regarding the about the news before, but nothing. No questions from anyone. So it seems
Brilliant. Okay. So can I just thank Tina and Rachel? Any last sort of 10 seconds comments or observations?
Just from my perspective, just if anybody wants to reach out, then check out the Target 5 Instagram page, send us a message. I'm on LinkedIn, Tina Wenham. Always happy to chat to people who are in and around the investing kind of in property thought process, if you like.
Yeah, I believe you're maybe speaking at a Prop L event on Saturday,
Yes, on Saturday.
With Aisha Forey. Aisha's our fellow director, business partner in LEOcrowdfunding, and I think you're speaking to one of her property networks on Saturday.
That's right, on Saturday at 11. So yeah.
Excellent. You enjoy that.
Thank you.
And Rachel, any last minute comments?
Yeah, just the same really. If anyone wants to get in contact to speak about investing or social media work or anything like that, yeah, you can contact me on my social media as CSEE Investments or Rachel Rain, and also CSEEinvestments.com as well.
Fantastic. Okay, listen, everyone, thank you very much. Have a great day. Thanks for joining us. Hope you found it of value, and look forward to seeing you again next week.